Assalamu alaikum to all of you and a very good morning. My name is Hamad Sarwar and I'm teaching paper F7 financial reporting, FA financial accounting and SBR paper P2 and auditing paper for the last 15 years. And I have been attached with uh, one of the platinum status institute, that is Tabani School of Accountancy. And I wanted to thank ACCA for providing me this opportunity for conducting these sessions consecutively from the last 2-3 years. I have taught a P2 paper in this practice to pass sessions and then FR and financial accounting paper. So this is my second session for this financial accounting paper, and these are very useful sessions for those who are going to appear in the month of May or June, who are planning to sit in the examination, and those who wanted to join skill module as soon as possible. So these are very useful sessions in which you'll be having the opportunity to interact with me, and you can ask any type of questions, and we will discuss number of exam techniques in this session. We will cover the core areas of this paper, and we will discuss the misconceptions about the examination. So before starting this session, I wanted to know that uh, you people are clearly receiving my voice, and are you ready for this session? Just write yes in the chat box. Chat box is the platform through which you can communicate with me. If you have any question, you can just write the question in the chat box. So please write yes in the chat box so that we can start the session. Please write yes in the chat box so that we can start the session. Okay, wonderful. So if you have any type of question, you can ask me directly on this chat box. Wonderful. So moving on towards the next slide. Now this is the format of the examination. It will be a 2 hours exam, which has section A and section B. Section A will be a 35, sorry. Section A will be having 35 MCQs, of which each question carry 2 marks. The total weightage of the section A will be 71. Section B will be having 2 multiple task questions, which could be from the favorite areas of the examiner will be consolidation. It could be from the company accounts. The examiner can ask you the question from the incomplete records, or from the cash flow. So these are the favorite areas of the examiner for section B: consolidation, company accounts, incomplete records, and cash flow statements. So there will be 2 multiple task questions. Each will be having 15 marks, and total weightage will be 30 marks. That's the format of the examination. The average passing percentage of this paper is 70%. Sometimes it will go up to towards 70, more than 75%, but the average passing ratio is 70%. That is a very good percentage as far as the professional examination is concerned. Now this will be the schedule or planner for this session. From the day one, we'll be covering the incomplete records topic along with the company accounts, and the relevant IFRS is IS 1. In day two, we'll be focusing on the consolidated balance sheet. In day three, we'll be focusing on the consolidated income statement along with the application of associate company. So these are actually the most important area for the MTQs as well as for the MCQs perspective. So we'll be focusing more on these. Then day four, we'll be focusing on the ratios and IFRSs. And on day five is for the remaining standards. And uh, if you miss a particular target in a particular day, then that will be covered in day 5. That's the overall format. Now, starting from the topic that is incomplete records, this is one of the most important topic with reference to the examination, and it will cover almost all of the syllabus that we have already studied. So let's start from this topic, incomplete records. Incomplete records is all about the missing figures. So it has nothing new. It will be based on the topics that we have already covered, like bad dates, like depreciation, like stock valuation, accrual prepayments, then the basic accounting concepts that includes the accounting equation, asset equals to capital plus liability. There might be a missing figure from this equation, or it might be from the business equation, that is P is equals to I plus D minus C. That is called business equation. It could ask you a question from the control accounts. So any area which is missing can be asked in this topic. So the tools that we use for incomplete records will be, the first you need to know about the concepts of markup and margin. Then you should know how we prepare the control account, that includes debtors control account and creditors control account both. Now, what is this? What are the items of the cost of goods sold statement? What are the things that covered under the cost of goods sold statement? How we prepare the cash account? There could be some missing figure from the cash account. There might be a missing figure from the bank account. There might be a missing figure from the expense account. So it's all about, income records is all about finding the missing figures. So sometimes examiner might ask you to calculate the sales. Sometimes examiner might ask you to calculate the purchases, the drawings and inventory. So suppose examiner has asked you to calculate the sales. So what are the techniques that comes in your mind in order to calculate the sales of the business? Can you tell me what comes in your mind if the examiner has asked you to calculate the sales for the business? Can you write in the on the chat box what comes in your mind first when the examiner has asked you to calculate the sales of the business? I think I should have to give the answer. Okay, I have received an answer from the student. Control accounts, revenue earned, margin. Okay. Whenever an examiner has asked you about the sales of the business, sales means the total sales of the business. Total sales includes the cash sales and the credit sales. Credit sales can be identified from the receivable ledger control account, or you can say this sales ledger control account or debtors ledger control account, that are interchangeable names. Cash sales can be identified from the cash account or bank account. or if the data is different, then you can identify the sales from this equation. Sales minus cost of goods sold is equals to gross profit. So if you have been given gross profit and cost of goods sold, we can identify the sales directly. Or if any of the amount for the cost of goods sold or gross profit was given along with the markup or margin, then you will be in a position to extrapolate the sales figure, either from the gross profit or from the cost of goods sold. So these are the tools that we use in order to calculate the sales. Similarly, if you want to discuss about the purchases, purchases can be identified from the purchase control account, or cash purchases can be identified from the cash or bank account. And it can be identified from the sales, like using the markup or margin, we drive the cost of goods sold from the sales figure, and then from the cost of goods sold, we can identify the purchases if we have been given the opening and the closing stock. So these are the techniques and the tools that you should know in order to calculate the missing figures in the records. Now, cost of goods sold usually includes opening inventories plus purchases less closing stock. So these are the basic items that covers under the cost of goods sold. But it might include any sort of expense if the examiner has asked you, like it could include a depreciation expense. If the examiner has mentioned in the question that depreciation will be charged in the cost of goods sold, then it could be included in the cost of goods sold. Then the carriage inward figure should be added in the cost of goods sold. If we have got the purchase return, it should be deducted from the cost of goods sold. And if you have a drawing of inventory, so it should be adjusted from the purchases. So can you guys tell me, if the owner of the business, the accounting entry, if the owner of the business has withdraw inventory for his personal use from the business, if the owner of the business has withdraw inventory for its personal use from the business, what should be the accounting entry for this transaction? Owner has withdrawn the accounting inventory from the business. So what will be the accounting entry? What should be debited and what should be credited? The owner has withdrawn. Yes. Only Hassan Adnan has given the right answer, and the right answer is drawings debit and purchase account credit. So the accounting entry should be drawings debit. We never use the word stock. So purchase account should be credit. So that's why we deduct the drawings of inventory from the purchase account. Very good. So drawings account debit and purchase account credit. Do remember this accounting entry. This is very important with respect to the examination point of view. Okay. Now talking about the margin. What is the meaning of the margin? Margin means sales will be considered as the base amount, which is 100%. Profit will be the percentage of sales, and the missing figure will be the cost of goods sold. But when we talk about the markup, it means the cost of goods sold will be considered as the base, which is 100%. Profit will be the percentage of the cost of goods sold, and the sales will be the sum of the gross profit and the cost of goods sold figure. So if the sales is 100, cost of goods sold is 60, and the gross profit is 40. So can you calculate the markup and margin from this equation, from this data? So what will be the percentage of the markup and margin in this data? The sales figure is 100, cost of goods sold is 60, and the gross profit is 40. We have 1 minute to calculate this. What will be the percentage of markup and margin in this data? Any answers? Margin is 40%. Very good. What about the markup? Markup is 29%. Okay. Now I'm going to solve this. Check this point. When we talk about the margin, that means the sales is 100%. So the formula for the margin should be gross profit upon sales. The gross profit percentage for is amount is 40. The sales is 100. The percentage will be 40%. But we know when we talk about the markup, the cost of goods sold is 100%. So the cost of goods sold is 100%. So the formula should be cost of gross profit upon cost of goods sold. So whatever we have in the denominator will be considered as 100%. So 40 divided by 60. So when we divide 40 by 60, we got the value of 66.67%. So this could be one of the questions that examiner might ask you in the examination, that calculate the percentages using markup or margin. I hope this has cleared some of your concepts about the markup and margin. Is it clear to all of you, or you wanted to ask anything? So if you have any question in your mind, please just write in the chat box so that I'll be able to clear your doubts. So it's clear now. Okay, wonderful. So if it is clear, then calculate this figure, this question. You are required to TB last thing. I didn't get your question. Can you repeat your question, Hassan Ghori? So we have received one of the answer, that is 285,600. So the total sale was given to you guys, and the profit margin is 40%, and you are required to calculate the total cost of sales. Do you want the review of the last slide? Actually, we have discussed about the concept of the markup and margin. The thing that you should know that in margin situation, if the margin was given to you, the sales will be 100 considered as 100%, and if the markup was given to you, the cost will be considered as 100%. And don't you worry about if you miss anything during the lecture. It will be uploaded tonight on the Vimeo platform, so you can listen this video as much as you can. And if you have any question that comes in your mind, you can ask me on my WhatsApp number as well. So I'm sharing my WhatsApp number with you. So I've shared my number with you guys. You can ask any type of question from me directly. Okay, so let's solve this question. Sales, cost of goods sold, and gross profit. As it shows, there is a margin of 40% means the sales will be 100%, profit figure will be 40%, so the cost of goods sold will be the balancing figure. And we have been given a sales of 4,76,000. So all you need to do is to divide 4,76,000 by 100 and multiply it by 60 in order to calculate the cost of goods sold. So what we are doing, 476,000 divided by 100, because it is a 100% figure, multiply by 60, we got the value of cost of goods sold. So 4,76,000 divided by 100, multiply by 60, we got the value of 285,600. Very good. Wonderful. If you have got any issue, you can ask me directly. Is it clear to all of you? Do you want any explanation in this question, or should we move forward? Okay. Now another question for you guys. Now in this question, you are required to calculate the purchases. So based on the available data, you can say that the sales, cost of goods sold will be derived from the sales. And from the cost of goods sold, we can identify the purchase figure. So this technique should be used. So I want the answer. So the right answer is please try to solve it. It will improve your practice, it will improve your concepts, and definitely you'll be getting the benefit if you are solving it and taking it seriously. So any answers? So the right answer for this question is 174,500. Very good. So any of you wanted the explanation for this question, or should we move towards the next question? Explain. Okay. Now for all type of questions related to the cost of goods sold, gross profit and markup, first you need to write the equation, that is sales minus cost of goods sold is equals to gross profit. And the question clearly says that it is a markup. Markup means the cost will be considered as 100% and the profit percentage is 30%. So the sales will be the sum of these two figures. It should be 130%. And we have been given a sales of 221,000. So what we need to do in order to calculate the cost of goods sold, just divide this figure by 130 and multiply it by 100. So when we divide 221,000 by 130 and multiplied it by 100, you will get the value of the cost of goods sold, which is 1,70,000. And definitely the profit figure will be 51,000. So the cost of goods sold is opening stock plus purchases minus closing stock. The cost of goods sold was given to us. That was, we have identified this figure is 1,70,000. The opening stock is 43,000. Purchases is the missing figure that we need to know, and the closing stock is 47,500. So that's my whole accounting. That's my whole equation. So when we transferring this figure on the left hand side, the sign will be changed with the minus. The opening stock should be deducted and closing stock should be adding in 1,70,000. And this is how we have calculated the purchases figure, that is 174,500. I hope it's clear now. Now one more question for you guys. Now this question is about the inventory destroyed. Inventory means closing stock. So whenever the examiner has asked you about this inventory, the approach should be you need to calculate the cost of goods sold from the sales figure first, and from the cost of goods sold we have to identify our closing stock. So suppose our closing stock is 60,000 and the question was saying that the stock after the fire or damage is remaining as 20,000 just. So that means 40,000 of the stock was destroyed because of the fire, or it might be a flood, or it might be any sort of natural disaster. So whenever the question comes about the closing inventory or inventory, first the step that you need to follow is to calculate the cost of goods sold from the sales figure, and then from the cost of goods sold you need to identify your closing stock. So attempt this question. I'm giving you just 1 minute to solve it. Is it done? Any answers? The right answer for this question is B. Wonderful. Explain. The approach is simple. First, you need to identify the cost of goods sold from the sales figure, and for the cost of goods sold, you need to calculate the closing stock. Now, first you need to write sales, cost of goods sold, and gross profit here. The markup is 25%. Markup means the cost of goods sold which should be 100%, profit should be 25%, and the sales figure should be 125%. And you have been given a sales of 9,85,000. So first you need to identify the cost of goods sold by dividing the 9,85,000 by 125 and multiply it with 100. So we got the value of the cost of goods sold, which is 7,88,000. Then opening stock plus purchases less closing stock is equals to cost of goods sold. Now this time the cost of goods sold should closing stock should be considered as a missing figure. So the opening stock is 6,20,000, purchases is 7 lakh, closing stock is the missing figure, and cost of goods sold is now 7,88,000. So when you change the side of purchases, it will, and opening stock, it will be deducted, and the answer for the X should be 5,32,000. So our closing stock should be 5,32,000. And the question is saying that after the fire, the owner's salvage inventory valued 1,80,000. So there is a inventory of 1,80,000 that is left in this warehouse. So this is the amount of the stock that was destroyed because of the fire, which is 3,52,000. The answer is B. Is it clear now? Okay, great. Now moving on towards the next question, that is, based on the information above, what was the value of the purchases made during the year? So from this question, you need to identify the purchases figure. Using that trade payable account, because it says a company has recorded the following details relating to trade payables: balance at 1st January and 31st December. Please give your answers. Is it done? The answer should be 173,029. Creditors is a liability. That's why the opening balance should appear on the credit side. The closing balance will appear on the debit side, 43825. And all the payments that we have made, which should appear on the debit side. So we had made two payments, 430 from the till and 167 224 from the bank account. So the whatever the missing figure will be the purchases amount. It should be 173,029. I hope this question is clear now. Do you guys want any explanation in this question, or is it clear? Any question from this slide? Okay, I have selected few questions for the discussion in the slides, which are important with respect to the examination. So one more question from the examination side, in which you are required to calculate the sales figure. So as I have said earlier, that sales could be identified from the receivable control account, or you can use the bank account. So you have 1 minute to solve this question. I want all of you guys to please do attempt these questions so that it will clear your doubts. At least try and write your answers in the chat box. Okay, that's wonderful. That I have received one of the answer from the student. That is 39735. Wonderful. That at least you should try and give your answers, no matter whether it is right or wrong. But in the professional examination, attending the question on the right time is very important. Oh, wonderful. We have received one more answer. That is 39685. So now we have two options. Option A is 39735 and option B is 39685. I think I should solve this question. Now, sales can be identified from the receivables figure, trade receivables. Trade receivable is an asset of the business, then that's why its opening balance will appear on the debit side. Closing balance will appear on the credit side. 1928. Whatever we have received in the form of cash or bank will appear on the credit side, and the sales will be the balancing figure. So if we identify that how much cash that we have received from the customers, then definitely you can identify the sales figure. So right now there are two items which is missing. So in order to identify that how much cash or bank we have received, you need to make a cash account. It said that B company maintains a cash load of 50. Cash load of 50 means at the start of the period there will be 50 in the bank account or cash account, and even at the end you need to maintain a float. So that's why you withdraw the 50 for the next day. All the receipts from the credit customers bank were banked after the following payments were made. So the company has made the following payments for the general expenses. It's 4,500. For the drawings, company has paid 6,250, and company has deposited the amount in the bank, which is 28,454. So these are the payments that we have made. So definitely we have received the cash from the customers. Through which we have made the payments of general expenses, drawings, and bank. So the cash received from the customer should be the balancing figure 28,454 plus 6,250 plus 4,500. So it is actually 39,204 is the figure that we have received from the customers. So nothing was received from the bank directly, but in the cash we have received 39,204 amount. So we can identify the missing figure as the sales, which is 39,204 plus 1928 minus 1447. So the answer should be 39,685. Is it clear to all of you? Please give your feedback. Is it clear? Yes, wonderful. Not too much. If you have any question that comes into mind, you can ask me. The simple concept is we have calculated the cash received from the customers from the cash account, and this amount is then possible figure to calculate account and cash at the bank. Cash at the bank. Cash in hand means the cash that you have in your business, which has not yet been deposited in the bank, and you don't need to withdraw your cash from the bank. It's in your hand. You can use that cash at your ease. But whatever the cash need, you use the banking channel for, like checks or pay orders or demand draft. So it's very simple that whatever cash that you have in your hand is the cash in hand, and whatever the cash that you have deposited in the bank account will be the cash in the bank. Please do ask as many questions as that comes into mind, because of the fact that in these MCQs you can score 100% marks if your concepts are clear, and even you can score 0% if you have weak concepts. So you can see that whatever question that I have selected, these are not duplicate questions, in fact, or repeated questions. So each and every question is teaching you a new technique of identifying the missing figure. So one more question for you guys, in which you are required to calculate the drawings during the year. Okay, before attending this question, let me tell you first the format of the cash in the bank account. So these are the format of the cash account on the bank account. Like if you have been given opening balance of the cash account and the total cash received and the payments that you have made during the year and the closing balance. So you can identify the cash drawings as a missing figure. Similarly, if your cash is at the bank, the opening balance will appear on the debit side So whatever the cash that you have received directly in the bank will be appear on the debit side, and all your payments will come on the credit side with the closing balance, and your missing figure can be identified as drawings. So this is the technique that you need to use in order to calculate the drawings figure from in this question. So I want you guys to solve this question. Practice question 6. Bob owns and manages B companies, although he does not keep the detailed accounting records. All of the Bob's sales are cash. He pays certain expenses from still and then banks the remaining fund. So you need to draw a cash account, and your missing figure will be drawings. So please do attempt this question and write your answers in the chat box. Any answers? Try to solve these questions and give your answers in the chat box. I'm just waiting for your answers. And if you find this question difficult, just ask. You can write in the chat box that you will not be able to solve it. Then I will start solving it again. Okay, let's start the question. This question has got a float of 1,000 rupees. So 1,000 rupees opening balance, as well as the closing balance should be 1,000. So all the payments that we have made from this cash account will appear on the credit side. Purchases is 20,000. Wages is 100 per week. So it should be converted into yearly wages. So how we multiply and calculate the yearly wages from the weekly wages? By multiplying it with 52. Because there are 52 weeks in a year. So wages should be 5200. Stationery that we have bought is having a worth of 500, and we have electricity bill is 1200, and we have deposited into the bank 12,800. So these are all my payments except drawings. Now what about the receipt side? On the receipt side there will be a cash sales. Now examiner has not yet given us the cash sales figure, but tells us about the opening stock. Now we can calculate the cost of goods sold by adding the opening stock, which is 2000, plus purchases of 20,000, less closing stock of 3,000. So the cost of goods sold figure will be 19,000. So from the cost of goods sold of 19,000 and a margin of 20%, you will be able to calculate the sales figure. Yes, we can identify the sales figure from this 19,000. In case of the margin, sales will be considered, we can write it here, sales, cost of goods sold, gross profit. Margin means sales 100%, profit will be 20%, and the cost of goods sold will be 80%. And we have been given a cost of goods sold of 19,000. So now at this time we need to divide 19,000 by 80 and multiply it by 100. So we got the value of the sales, which is 23,750. So now by adding 23,750 by in the opening stock, and all the payment should be deducted from the here, 5,200 minus 500 minus 1,200 minus 12,800. So the drawings will be the missing figure. If this question is clear now, wonderful. Now, this is the one of the question in which you are required to calculate the profit for the year. Now, profit can be calculated by using sales less cost of goods sold is equals to gross profit minus expenses is equals to net profit. So this could be the formula that we use in order to calculate the profit. Or the profit can be identified from the business equation, which is P is equals to I plus D minus C. Now what does I means? I means increase in capital. D means drawings, and C means capital introduced during the year. So based on the data you need to define, you need to identify whether we should use this technique for the calculation of the profit for the year, or we need to use this technique. And do remember this, that capital can be calculated as asset minus liability. Asset minus liability is equals to capital, which is called net assets. So net assets means exactly capital. Do remember this point. Now, Umberto does not maintain a full set of accounting records and needs to identify the profit or loss made by his business for the year ended 31st December 2007. He knows that his capital balance at 1st January 2007 was 12,732. That means it is my opening capital. So I can be calculated as the closing capital minus opening capital. So we have been given opening capital. That means we need to follow the second technique in order to calculate the profit. Then let's see that 31st December, the company had a business van at a cost of 15,000. Now, what examiner wants you from this situation? That you should add assets minus liabilities and calculate the net assets at end or the capital at end. So you are required to calculate the capital at end. And there will be a drawing figure of 12,000 that was given to you in this question. And there is some bank liabilities, and there might be some capital introduced. So by using this second equation, all of you are required to solve this question and calculate the profit or loss for the year. I'm giving you just 30 seconds for this. Okay, so let's start this question. Now the question is P is equals to I plus D minus C. We have been given a drawings of 12,000 in this question, and there is no additional investment, or you can say capital introduced during the year. There is no additional investment to capital introduced. Now all you need to know the closing capital minus opening capital. And opening capital was given to us here, which is 12,732. So all you need to find out is to calculate the closing capital. The closing capital was not given to us directly in this question. So from the date we can identify 31st December, you just need to deduct the assets and liabilities and you will find the capital. Company had a business van. So van is my asset having a value of 15,000. It should be added here. Inventory valued at 4,200. So inventory is again my asset. It should be added here. Receivables outstanding from the credit customer. Receivables is my asset. It should be added. Cash at the bank is 2,500. Again, it should be added. So all the assets should be added. And there's a bank loan. Bank loan of 5,000 is my liability. It should be deducted here as 5,000. And 4,700 as my payables. So we all knew from the accounting equation that asset minus liability is equals to capital. So we are adding assets 15,000 plus 4,200 plus 8,500 plus 2,500. So my total asset is 30,200 minus liability of 5,000 bank loan and 4,700 payables. So the total net asset or the capital at end is 20,500. So when you input this figure here, the drawing is 12,000. There is no capital investment. So by adjusting these figures, we got the profit of 19,768. That will be the profit for the year. Is it clear to all of you guys? Now here we have got the format for the receivables and payables control account. You need to learn these formats because examiner can ask you the questions from the control account. So these accounts will be used for the control account questions as well as the incomplete records question. But from the incomplete record, examiner can ask you any missing figure, which might be a purchase figure, it might be a payment to the supplier, it might be the closing balance. From the sales figure, usually examiner is asking about the credit sales and the payment that we have made received from the customers. So these are the formats that you need to learn. So if you know the format, you have no issue in solving this question. So the requirement is to prepare the trade payable control account and drive the total cost of the purchases. You need to identify the purchase figure using this format. So if you want to take the snapshot of this T account, you can take it on your cell phones. And then we are moving towards the question, which all of you are required to solve it. The requirement is to calculate the purchase figure. Today is 27th of April till 1st May. We'll be having a daily live sessions from 10 to 1, from 10 a.m. to 1 p.m. according to the Pakistan Standard Time, PST. So up till now, can you give your feedback about this session? Do you think that this session is useful for you guys? Is it beneficial for your concepts? And ACCA should conduct these types of sessions in the future. Please give your valuable feedback about the session. The best part of is you'll be having the recorded videos of these sessions on the Vimeo from tomorrow. And you can see this and take the sessions as many times as you can. Yeah, I will send with you guys and share with you guys the recorded session. You just send me a message on the WhatsApp on my number. I will add you in the group. So in the group, you can ask questions from other students of the group, or you can ask me the question directly. And we'll be providing you, inshallah, support till the examination date. So can you give you the answer of this question? That is purchase ledger control account. The company does not maintain a full set of accounting records and need to identify the total cost of purchases made on the credit during 2003. It had a trade payable outstanding of 45,234 on 1st January. And the closing balance is 48,321. Payments made to the supplier during the year 2003 total. So my payment will appear on the debit side. That will be 590, 164. The discount that we have received from the supplier is 5729. Purchase return, which is return outward, amounted to 3600, and the contra is 4500. So now the missing figure or the balancing figure will be the purchases amount. So let's calculate it. It's 590, 164 plus 5729 plus 3600 plus 4500 plus 48321 minus the opening balance of 45234. So the answer for this question will be 607080 purchases figure. Wonderful. Very good. Is it clear now? That's clear. So these are the formats for the cash account and the bank account. You need to memorize these accounts. That examiner can ask you any missing figure. It might be cash bank, drawings, expenses, purchases, or the cash sales figure. The cash bank from in the hand. It might be a cash paid to supplier, expenses, drawing. The examiner can ask you about the any missing figure. Now this is the account for the expenses. Prepayments is my asset, so it will appear on the debit side for expenses. Accrued expenses is my liability, so it will appear on the credit side. So whenever we made a payment, we always debit the expense account and the credited will be the bank account. So the balancing figure will go in the income statement. This is the format through which we identify the expense charge for the year. Accruals is my liability. It will show in the current liability of the balance sheet. And prepayment is my asset. It will go in the current assets of the balance sheet. And this amount will go in the income statement as an expense. So this is the T account format for expense through which you can identify the accruals at end, the prepayment at end, and the P&L amount. Now that's the end of the topic. Income records. I have shared my, I will be sharing my handouts with you guys after the break. I have two handouts for your practice. The first one is this practice with the name practice handout 1. So these are your questions that you need to solve it before the next session. So we have covered this topic, incomplete records. So all of you are required to solve the question by tomorrow, and we will discuss the answer of these questions by tomorrow. Secondly, there is another handout, day 1 extra practice handout. So all you need to do the practice of these questions that we will cover by the end of this session. So let's take a break of 10 minutes. After the break, we will start the session. Let's take a 10 minutes break. Okay, you welcome back after the break. So let's start the new topic, that is company accounts. Company account is one of the most favorite topic of the examiner. It could be asked in section A, or there might be a complete 15-mark question in the section B from the company accounts. So if you guys are ready, just write yes in the chat box so that we can start the topic. Please write yes in the chat box so that we can start the topic. Okay. Now, company is different from sole proprietorship business and partnership in some of the aspects. Like with reference to the ownership, the sole proprietor, the proprietor or the single owner owns the business. Or in case of the partnership, the partners, two or more partners owns the business. But there are, with respect to the company, there are the large number of owners who are called the shareholders, who own actually the shares of the company and who are called the shareholders or the members of the company. So if you have got more than in fact 20 owners, that you are legally required to make a company. With respect to the liability, sole proprietorship business and partnership business has got the unlimited liability of the business. Means if the business has not yet has not no cash in the business, then the owners of the business will be personally liable. But in case of the companies, the liability will be limited for the shareholders to the extent of their investment in the business. Legal status, the business and the proprietor share legal identity. Owner and business is same with respect to the legal status of the business. But in case of the company, they are separate legal entities. Management, the owner usually owns and manages the business. But in case of the company, the members are only the shareholders or the investors of the business. They usually do not manage the business. They appoint the directors who run the company on their behalf. The profits of the business will be taken by the sole proprietorship business or partnership business with the name of drawings. But there is no concept of drawings in the company. So the profit will be distributed with the name of dividend to the shareholders. With respect to the taxation, there will be no tax on the business profit. Only the owners who have to pay the tax. But in case of the company, the profit will be based on the company's profits. Tax will be based. When you see the balance sheet of a sole proprietorship business or partnership business, there will be the opening capital plus profit minus drawings. But when you see the balance sheet of the company, there will be the term we use will be the share capital and reserves in the equity section. So the equity section is actually different for different forms of ownership. Assets and liabilities are more or less same, but the equity section is actually different. There is no legal requirement specific to the sole trader, but there is a proper law that is called company law, who governs the company, that how we should start the company, how we should run the company, and even how we should close the company. So everything is written in the law, And the name of this law is company law. The business is closed to outside investors, means that if you are the sole trader, this is your personal business, no one can invest in your business. But in case of the company, anyone can invest in the company. Like in the Apple company, anyone can invest in the company from any part of the world. But you cannot invest into the sole proprietorship business or partnership business unless they allow you to invest. Now, the capital of the sole proprietorship business will be distributed into small parts, and that small part or piece is called share, which is having a fixed value that is called the par value of the share, but its market value can be equal to the par value. It could be greater than the par value or could be a less than the par value. But the par value or the face value will always remain the same. So it is actually the market value which changes over time. So the capital of the business will be distributed into the shares. That's why we use the term share capital. So normally we pass the accounting entry as cash debit and capital credit whenever the owner invests cash into the business. But for the company, we use the word share capital. So the amount can be calculated as the number of shares multiplied by par value. Do remember this, that share capital account will only includes par value of the shares. So if the market value is above the par value, then the excess amount will go in a separate account, which is called share premium account. So now all of you are required to make the accounting entry for this transaction. You have 10 seconds. Please make the accounting entry for this transaction. Now the accounting entry should be cash or bank debit and share capital Correct. The amount can be calculated as 2,50,000 into 0.25. So it will be 62,500. I hope it's clear now. Now, types of share capital. There might be authorized share capital, that is the maximum number of shares that you can issue by law. So legally you are allowed to have a maximum number of shares, which is called authorized share capital. So the part of the authorized share capital that you issue to the general public is called the issued share capital. And the amount of issued share capital the company has asked shareholders to pay to date is called the called up share capital. And the amount that the company has paid is called the paid up share capital. So there are four types of share capital: authorized, maximum limit, issued, offered to the general public, called up, for which the company is calling the capital or the amount from the shareholders. It's like the installment, and the paid up means a part of the capital that the company has paid. Now, again, the second question is, in this question, again, the par value is same. It's 0.25. So you are required to calculate, sorry, make the accounting entry for this transaction. Now the accounting entry for this should be bank debit, share capital credit, and the excess amount will go in the share premium account. So bank will be debited by 1.25, 437, 500. Share capital will be credited with 87,500 with the par value. And the excess amount will go in the share premium account. Is it clear to all of you? Is it clear? Now, if we combine the previous accounting entry with the current one, previously we made an accounting entry of bank debit and share capital credit with the amount of 62,500. Yes. So sometimes examiner might ask you to calculate the capital structure of the business after two accounting entries. Capital structure, share capital, share premium. So this share capital account plus this share capital account should be added. So when we add these two figures, 62,500 plus 87,500, the amount will be 1,50,000. And in the share premium, there will be a balance of 3,50,000. So after these two accounting entries, the revised capital structure is now share capital balance 150, share premium balance 3,50,000. So sometimes examiner might ask you to calculate the capital structure of the business after two or three accounting entries. So I hope it's clear now. We actually are reporting the total share capital after these two accounting entries. So whenever we credit the share capital account, the credit should be added. Now the shares are of two types. The first one is the ordinary shares and the second one is the preference shares. There is a difference between the ordinaries and the preference shares. The most important difference is the voting rights. Ordinary shareholders have got the voting rights and preference shareholders has got no voting rights. Voting rights means that actually the board of directors who runs the company. So who can elect the board of directors through its voting? It's actually the ordinary shareholders who can cast votes in order to elect the board of directors. The most important feature for the preference shares is that they have got the fixed dividend. They will get the fixed return on their investments. But with respect to ordinary shareholders, no right to have a fixed dividend, receive what the director decided to pay. So it is actually a variable dividend which might be zero in some situations. Then they will always receive the priority in case of the distribution of dividend. So whenever the company distribute the dividend, the first preference will be given to the preference shareholders. Similarly, if the company wind up, then the capital amount will be distributed to preference shareholder first, and the residual claim will be for the ordinary shareholders. But the real owners of the business is actually ordinary shareholders. Which share is better, ordinary or preference? If I tell you about the statistics of the world, mostly 95% of the investors invest in the ordinary shareholders. Only 4 to 5% investors invest in the preference shareholders. So definitely, according to statistics, ordinary shareholders are better investment opportunity as compared to the preference shareholders. Sorry. Now, example 3 is actually connected with example 2 and 1. So you are required to make the accounting entry and calculate the dividend, respective dividend based on example number 1. And 2. With respect to example 1 and 2, we have got the share capital of 1,50,000 and the share premium balance of 3,50,000. Now from here we are going to start example 3. Okay, let's start. Big Boss now issues 1,25,000 6% preference shares. Now you can see the percentage fix, which shows that we will give the fixed percentage of the profits to the preference shareholders. So the accounting entry will be same: bank debit, preference share capital credit, and each share is having a par value of 0.25. So 1,25,000 into 0.25, We got the value of 31,250. Now talking about the dividend of preference shares will receive a dividend of 31250 into 6%. Whatever be the profits of the business, they will receive this fixed dividend on an annual basis. The amount should be 1875. Now, with respect to the ordinary shareholders, we are going to pay a dividend of 5 cents per share. Now, remember this point that whenever the examiner will give you per share dividend, you need to multiply the per share dividend with number of shares. And number of shares can be identified with the share capital divided by par value. So can you calculate the number of shares for this share capital having a value of 1,50,000? How many number of shares in issue if the share capital value is 1,50,000 and the par value is 0.25? Can you calculate the amount? How many number of shares? Yes, very good. The number of shares will be 6 lakh by dividing share capital, which is 1,50,000 by the par value of 0.25. We got the value of 6 lakh. So 6 lakh is the number of shares, and company is going to pay 5 cents. 5 cents means when we convert into dollars, it will be 0.05. So the amount of the dividend will be 30,000. So if the examiner is going to ask you to calculate the total dividend for the year, the total dividend will be 30,000 plus 1875. So it will be 31875, the total dividend for the year. Okay, is it clear to all of you? Please give your feedback about this question. Okay. Now please check in the handout section that there are 3 handouts. You can access the day 1 PPT as well in the PDF format, and you'll be having 2 practice questions handout. So I want all of you to please download these handouts, and you are required to solve this handout till the next class. So before coming to the next class, all of you are required to solve these 2 handouts and revise, and you can revise the topics from the PPT. So moving forward towards the next topic, that is dividend. Now remember this point that dividend can be given to you in the form of percentage, or it could be a per share dividend. So whenever you will be given a per share dividend, you need to multiply it with the number of shares in order to calculate the dividend. But if the percentage was given to you, you need to multiply it with the share capital balance. Share capital balance means number of shares multiplied by par value. So now please do attempt this question, example 4. Is it done? Okay, let's solve it. An entity has in issue 1 million ordinary shares with a nominal value of $1 each. So the company has issued, so the accounting entry should be cash debit and ordinary share capital credit by 1 million. Oh, 1 million. And 100,000 5% irredeemable preference shares with a nominal value of 0.5. The accounting entry for this will be cash debit preference share capital credit. 100,000 shares. Note this point that there is no dollar sign here. It means these are number of shares. But with respect to the ordinary share, you can see here there is a dollar sign here that shows this is a 1 million in value. So we have number of shares which is 100,000 into 0.25. 0.5 we got the value of 50,000 for the preference shares. Preference shareholders will get the dividend of 5% of their investment. So it will be 2,500, and the ordinary shareholder will get the dividend of 90 cents per share. 90 cents means 9 cents, sorry. So we have got the 1 million shares into 0.09. So the amount will be 90,000. So the total amount of the dividend that the company is going to pay to the shareholders will be 92,500. I hope it's clear now. If it is clear, please write yes in the chat box. If it is clear, please write yes in the chat box. It's 100,000. It is actually 100,000 5%. 5% is the fixed dividend for the preference shareholders. The company has issued, in fact, 100,000 shares having a par value of 0.5. So that's why the investment is 50,000. So is it clear to all of you guys? Now, the accounting entry for the distribution of the dividend will always be retained earnings debit and dividend payable credit. So the total amount of the dividend is 92,500. So retained earnings should be debited by 92,500 and dividend payable will be credited with the amount of 92,500. I request all of the students if you wanted to join our study group, just send me a message on my WhatsApp, which was shown in the chat box, and then we will discuss the key concepts, the core topics on the WhatsApp. If you have any queries, you can ask with the other students of the group, or you can ask me directly. So please join our WhatsApp group so that it will be beneficial for all of you. So those who have sent me the message, I will add you in the group after a break after the class. So it's almost 30 minutes which is left before the class ends. Now, the next concept is about the bonus shares. Bonus shares is actually the shares which is free for the shareholders. The most important feature of bonus shares is it is free for the shareholders. It will be issued usually as a compensation of dividend. When the company has a liquidity issue, then company has to pay its dividend, but has a shortage of cash flows, then company usually issues bonus shares. Most important part is the bonus shares will always be issued at par value. Bonus shares will always be issued at par value. And bonus shares will always be issued in proportion of the existing shares. Like if we have got 10 shares and company is giving a bonus of 1 for 2. What does it mean? For every 2 shares, company is going to issue 1 bonus shares. So how many bonus shares a shareholder will get if he has got 10 shares? And company is paying wonderful. If an individual has got 10 shares, he will get bonus of 5 shares. So first you need to calculate, you should know the calculation of the bonus shares. It will always be based on some proportion of the existing shareholders, existing shares. Now, bonus can be advantages of the bonus shares is issued can be made for the share premium account, which has few other uses. Will allow the share price to fall to make the company shares more affordable to the new shareholders. These are the advantages of the bonus shares. Shareholder will now own more shares and could sell part of the holding. The disadvantage, the rationale of the bonus issue is not always understood by the shareholders. Sometimes it is difficult for the shareholders to understand the concept of bonus shares. So this is the story of the bonus shares. You should remember these 3 points. It is free shares. It will be always be based on the par value, and it will be issued on some proportion of the existing shares. Now let's solve this question. Example number 5, in which the company has got 50,000 shares and company is going to issue 1 for 4 bonus. 1 for 4 means for every 4 ordinary shares, company is going to give 1 bonus. So how many bonus shares that the company will issue if it has 50,000 shares? Now 1 upon 4 of the 50,000 will be 12,500. 50,000 divided by 4, it will be 12,500. So first of all, the company has issued ordinary share capital of 50,000. The accounting entry should be cash debit 50,000 into 1.5. So 50,000 into 1.5 will be 75,000. Share capital credit, share premium credit. Share capital will be credited via with 25,000 and excess amount will go in the share premium account. So this is the initial value of the shares. Now subsequently company has issued bonus shares of 12,500. By multiplying it with the par value of 0.5, we got the value of 6250. The accounting entry for the bonus issue will be share premium debit or share capital credit. 6250. 6250. So if you have any question regarding this question, please do ask it immediately. Now, what will be the revised capital structure after these two accounting entries, share capital and share premium balance? Can you tell me the revised capital structure after these two accounting entries? The balance in the share capital should be now and the share premium. 25,000 was initially available in the share capital account and we have again credited the share capital account. That means it should be added in the share capital. But with reference to the share premium account, there are 50,000 already available and we have debited the share premium account. So whenever we do the debit entry in the equity account, it will be deducted. So actually the revised balance is now 50,000 minus 6250. $43,750. And the share capital amount is 25,000 plus 6250. So it will be 31,250. So one of the questions that examiner might ask you regarding the bonus shares, that what will be the impact of bonus shares on the total equity. So see this, that one equity account is debited and one equity account is credited. Means that we are deducting from the equity account and adding the same amount in the equity account. In fact, the net impact of bonus shares will always be zero on the total equity. So examiner might ask you the question that what will be the impact of the bonus shares on the total equity? It will increase, it will reduce, or it will remain the same. So it will remain the same always, because bonus shares are debiting and crediting at the same time in the equity account. I hope it's clear now. If you have any confusions in your mind, please do ask. The double entry is 6250 share premium debit and share capital credit. As we are issuing the shares from the share premium, that's why we can debit the share premium account and crediting the share capital account. So the next concept that we have is the right shares. Right shares is simple shares, but the difference is it is only issued to the existing shareholders. As existing shareholders at a discounted price, that is called right price, which is always lower than the market value. So if the company is going to issue new shares to its existing shareholders at a reduced price, then this is called right shares. Now, what are the advantages of right shares? More cost-effective way of the company to raise the finance. Sorry, right shares. Yes. A more time-efficient way to issue the shares. If all rights are taken up, shareholders will maintain their existing percentage of the shareholding. Now, the disadvantages: lack of shareholder interest may reflect badly on the company. Unwelcome predators may try to acquire the shares where all rights are not taken up. Effect on the future dividend policy, as the company will have to issue more shares under the right issue, and it would have a fresh issue of the public. So these are the advantages and disadvantages of right shares. If just read it very carefully, and if you wanted the explanation of any point, you can ask it. The accounting entry for the right shares will be debit cash, credit share capital, and credit share premium. So both accounts are on the credit side of the equity. That means it increases the overall equity of the business. The right shares increases the overall equity of the business. Now I'm giving you 1 minute to solve this question. Now the name of the company is the Banana Bread Limited. Has issued 2,50,000 ordinary shares with a par value of 50 cents at a market value of 1.25. So accounting entry should be cash debit, share capital credit, and share premium credit. So these are the initial shares that the company has issued at the start of the year. So 2,50,000 into 1.2, the value will be 3 lakh for the cash account, 1,25,000 for the share capital account, 1,75,000 for the share premium. On 1st May, the Banana Bread Limited made a right of 1 for 3. Now the right and the bonus both are issued in the same proportion. So we have 2,50,000 shares already in issue into 1 upon 3. So it will be 83,333 shares. And each share is going to issue at the right price of 1.5. You can see here that the market value is 1.75. So right shares will always be issued at lower than the market value, the existing shareholders. So accounting entry will be 83,333 multiplied by 1.5. Which will be 1,25,000. Share capital will be credited with the par value. With 0.5, 41,667. and difference will go in the share premium account. The share premium account will go with 83,336. So if someone wanted to know about the total equity of the business after the right shares and the bonus share, right shares, it will add both accounts of the share capital and it will add both accounts of the share premium. So then we got the value of the total share capital after the right issue. And do remember this point, the right shares will always increases the total equity of the business. The right shares will always increase the total equity of the business. Whereas the bonus shares, the impact will be the same on the equity. Now, talking about the loans, like shares in company, there will be a loan having a fixed printed value that is called par value of the loan or face value of the loan, with fixed interest rate assuming 10% and maturity assuming in 5 years. So like shares, we distribute the amount of the loan into small pieces that is called debentures or loan stock. So each instrument has got the fixed value that is called the par value. Its market value may be different from the par value. Accounting entry, whenever we borrow the loan, the accounting entry will be bank debit and loan credit, no impact on the loan. But remember this point, its interest will always be based on the principal amount. The interest will always be based on the principal amount. Loan can be converted into ordinary shares. These types of loans are called convertible loan. Loan can be converted into ordinary shares is called the convertible loan. So there are two types of loan. One is the simple loan called the debentures or the loan notes, and the other one is called the convertible loan. Convertible loans, the loan that can be converted into ordinary shares. Now, examiner might ask you the question in the examination about the interest on the loan. So do remember this point that interest will always be based on the par value of the loan, the first thing. And interest will be based on the time period of the loan, how much time period that we have utilized, and the amount of the cash. Assuming at the start of the period we have got 6 lakh, but in the whole year we have used only 4 lakh. We haven't used 200,000 from the 6 lakh. Then interest will always be based on the amount of the cash that you have used during the year. Similarly, if you have used 6 lakh for the first 6 months and 4 lakh for the last 6 months, then interest will be based on whatever the percentage will be based on the 6 months on 600,000, and for the last 6 months it should be calculated on 400,000. I hope I have cleared some of the points today regarding the incomplete records and the company accounts. Only 5 minutes left, so I wanted to tell you some more information about. Now, for the next class, this example 7 is your assignment, along with the 2 handouts that I have shared already. So this is the taxation area that we will discuss in the next class. Then there are some other topics that we will discuss in the next. Now, what you guys need to do is to just memorize the format of the balance sheet. I'm just sharing with you the format of the balance sheet, that how we prepare the balance sheet for the company accounts, number one. Number two is how we prepare the income statement of the company account. And this is the format of statement of changes in equities. So these are the 3 formats that all of you are required to memorize in the mind, so that you will be having a grip on the long questions. In the long question, examiner might ask you to prepare the P&L or the statement of change in equities, or it might ask you to prepare the balance sheet in the long question. So the rest part of the topic that is left over will be discussed in the next class, along with the topic of cash flows. So tomorrow we'll be having 2 topics. The first one is to complete the topic, which is company accounts, and according to the plan, first of all we need to go towards the planning sheet. Yes. So today we have discussed some of the topics of the incomplete records, along with the company accounts, and tomorrow we will be discussing some of the core concepts of the company account along with the consolidated balance sheet. And in day 3 we will be discussing on the consolidated income statement, and then ratios and IFRS and cash flow. So if you have any question in your mind, if you wanted to give any feedback about the session, please write in the chat box, or if you wanted to give any suggestion, please give your feedback, give your suggestions about this session. And all of you are required to solve the handouts by tomorrow. So any questions? I'm asking it again. I think there is no questions. Any feedback about the session that you wanted to share with me? Because these type of sessions are conducted for the students of Pakistan, and in fact global students from different part of the world, to benefit the students. So ACCA conduct these type of session based on your feedback. If you think that these type of sessions should be conducted in the future, you need to give your feedback about the sessions. I hope this session will give you some benefits. It will improve some of the concepts, and we will discuss the topic consolidation and other part of the company accounts by tomorrow. But remember this point that you need to solve this practice handout before coming to the next class. So till then, thank you so much for your time and patience, and try to take interest in the topics in the course, so that this qualification will give you the benefits in the future. So thank you so much for your feedback, and inshallah we will start our class session 2 by tomorrow. I request you again to please revise whatever we have studied from the PPT slides, and try to solve your questions and take the classes at home. Don't go outside because the COVID is there outside your home, and we will discuss the consolidation and other topics tomorrow. So thank you so much for the time, and take very good care of yourself. Bye bye from my side, and Allah Hafiz. Thank you so much.